All right. Good morning. Good morning, everybody. Well, I was just looking at some levels. We've got the SPX closing on the COG line yesterday, 62.92. Imagine that. Those old COG lines, they just keep coming up. So when we look overhead from 62.92 and kind of look at, what we've got around there, 6,400 is a really big level, and 63.50 is a really big level. So here's 63.25. Then we start getting into this flip point, the flip point 62.73, and we're at 62.92 on the close. Now, if we move around in the pre-market, we're going to open higher or lower than that. But that's the levels over our head that we have to deal with. So it's, something we want to keep in mind. Now, when I start to just show puts, 6,200, it's got a lot of structure. And 6150, 6100, those 50 markers. But I thought it was worth looking at, when we think about can we rally and what's overhead that we could hit and where's the flip point, 6273. So we got auctions today. That's going to be a big deal. The Swiss flew into Washington, D.C. They're trying to meet the president before the deadline kicks in and hits them with 39% tariffs. We'll see if they can get that done or not. I don't think it's going to matter if they get in or not. If they, if he's busy and he can't get them in, I think he'll just make an announcement saying they're putting in the effort, and he'll give them some kind of relief on that deadline. Because things happen, right? He's going to get tied up in meetings the way presidents do, and who knows if they can get in or not. Japan down, Hong Kong down. They're both trying to bring it back. They were down more. Europe up just a minor amount. Then we've got small caps at a quarter with the NASDAQ also. Interesting that those two are towing the line together. Then the S&P, and all three of these with a really nice matching percent gain. It's not unusual. It's just unusual in the current market environment to see these guys match. Then the Dow outrunning all of it, not by much, but the Dow up a bit more. With the small cap smackdown that we took yesterday, it's nice to see the Dow up a little bit this morning. It's just we got to share the love a little bit, So we're going to get some jobs numbers today. The numbers don't see too far off. Is it what? You guys can't see what? I'm telling you, this Zoom lately. Let's try another one. My monitors glitched this morning and everything went black and came back on again. I bet one became two and two became one. How's that? Orale. Now you guys can see what I'm talking about. This is what I started with. 65, 64, 63.50, flip point 62.73. And if I only show the puts, then we've got some levels down here that can help us out. 6,200, 61.50, 6,100. We closed at 62.92 cog line. That's what I was trying to show you guys. Yeah. I'll have to figure out what happened with the monitors. It's a good thing I only run 4 now. So we got job numbers today, and the numbers don't seem far off, but this whole thing about, revisions and whether or not we can trust the numbers, which is kind of a joke, whatever, keep your eye on the clock. Watch these numbers as they come in. The one that really stood out for me is this productivity number from a minus 1.5 to a plus 1.9. There's some pretty big differences in those numbers right there. And it's at the same time, it's at 8:30. So we have the opportunity this morning for a liquidity gap setup. And that's going to be at 8:30. Then we're going to get inventories at 10. Oh, that's tomorrow. What am I doing? Getting ahead of the game. We got nothing today for jobs. We got the Swiss, we got auctions, and we have oil today. Crude oil inventories. So Lisa Collins, Susan Collins, with Lisa Cook. I knew there was a Lisa in there today. This is a panel discussion, so unless they ask them some fire headline kind of gotcha question, shouldn't have an issue with anything that they're talking about today. I say shouldn't, but you know, you always want to pay attention when we've got these Fed speakers. They can be taken out of context. They can say something that they didn't mean to say. You never know what could go off with that, right? So even though we don't expect anything from Daly and Cook, just be mindful, right? And we actually got Collins, Cook, Daly. For me, the big one today is the 10-year auction. These auctions do not get the attention they deserve, right? A lot of people don't even know that these auctions are happening. But that's because a lot of times they are nothing. Time, just goes by and nothing happens. And after a while, we get complacent and we quit looking at them. And then one day we get a big move at 1 o'clock and everybody says, oh, gee, what the heck was that? It was the auctions. So keep your eye on it, especially now that, we went over and we talked with Japan and we had this big meeting. Scott Bassett's been running around chipping his teeth. We just got done with QRA. So let's see, what the numbers look like. Oil should not be that big of a deal. 20 years ago it would have been, but nowadays it is less impactful than it used to be. It doesn't mean that it can't cause some issues. So if you look at the previous minus the consensus, we've got quite a discrepancy here. And that is another reason to be concerned about oil this morning. So we got some big ones. Watch the clock at 10:30 and 1 o'clock, and keep your eye on the headlines to see if the Swiss get a reprieve or if they actually get in to see the president. If he starts sanctioning these countries that are buying Russia's crude, that could send the markets lower too. He's threatened it, but he hasn't done it yet. He's talking about imposing levies on countries buying energy from Russia. And chips got hit this morning. SMCI, AMD, both hit really hard. And then Disney had some really good news, but they also had issues, right? They're joining up with the wrestling. They're going to be like the sole providers of wrestling starting next year. McDonald's and Shopify both jumped up. The put wall was rolled down just a little bit, and we don't know if this is just a mechanical feature because the puts that were there expired and it just looked for the next level, or if they're building out a location here. We will know if it's there tomorrow and then the next day, right? Otherwise, if it's just a one-day wonder, it's going to move again. When it moves, I share that picture of where it came from, right? It's the line chart that kind of highlights the call wall and the put wall, but I only share that if it moves, which is why I didn't share it yesterday. It hadn't moved. So we got zero gamma, depending on what site you use. These guys are calling it 6288. The other site was 6270 something for the SPX. We're at the volatility trigger. So if we break down below yesterday's low, get below the 3-week moving average, which was our support line yesterday, then we can test this zero gamma. And below that, we can really begin to expand to the downside. It's all about hedging dynamics and how dealers will behave once we're below the zero gamma line. Now, we're not talking about just, getting a couple of ticks below zero gamma and then seeing them respond. It would be a drop below the zero gamma line and a perceived drop lower. Like if they think we're going to go lower, they'll start to respond to it. And of course, when we are below that, how they respond is they sell into selling and they buy into buying. When we're above it, it's the other way around. They'll buy into selling and sell into buying. Confusing, I know. You can always just go to Spot Gamma. They've got a really great free public glossary, and you can go in and look at call wall, put wall, volatility trigger, zero gamma. You can read all about it, and it doesn't cost you anything. So we're a little bit pinched between the 10-day and the 3-week. And so we're bouncing like a pinball here in between those two. And that's what needs to break. If we break the 3-week, well, we're probably headed to the 10-week. And if we can hold the 3-week, then it's very likely we're going to jump back above the 10-day and continue that push to the upside. We've been talking this week about whether or not this was going to become the low, and it has. It is a low. We don't know if it's going to be the low. Then we've run up and we set this little pullback here. So today's candle is going to be very important. If we continue to fall in today's candle, then this is going to be a lower high. But we don't know that yet. Because if we continue to run up today, then this won't be a lower high. So yesterday's high is really important right now for that one reason. We either got to get above this to make sure that this does not become a lower high, or we're going to break yesterday's low and fall lower, and then that will make this a lower high. $63.54 is the midpoint for this entire drop. 63.06 is the midpoint for the big bar that we're in. That big bar is the bar in control. So that is where the trap is. 63.50 is the big options level. It's also the 10-day, and it's also the halfback of this entire zone or range. So it's 3 levels of resistance, 63.50. It's a really big deal. And if we can't get above 63.50, then we can't test yesterday's high, and then we can't try to get back up here and put in that level that makes this not a lower high. And that's what we need to focus on, is putting a lower high somewhere up here, or maybe not at all, right? If we could run all the way up and get above 4680, then we'd be putting in a higher high and it wouldn't matter. But that's a tall ask, and I don't think we've got it in us. We reached the ADR early enough in the day, which implies that we can go to the other side by the end of the day. 62.92 cog line. Imagine that. Those sneaky old cog lines, they just keep showing up. So this is the ADR half. We've already hit it. We've already pulled away from it. And that implies that we could go down here by the end of the day. That would not be bearish by itself, right? It's just a wave function. It's just the way price moves. Going to the lower ADR has nothing to do with being bearish or bullish. It's just a part of that wave. Just keep in mind, it doesn't owe us a move down to that 62.92, right? It's what is most likely, because we've already hit one side today. But we've got headlines that can move us around, and we've got a sideways market. So all we got to do is get out of the box and anything can happen. What I just highlighted is all of yesterday's range. So we can see the midpoint that we're working with. If we can get through our own Globex high, then we can challenge yesterday's high. But we got to get through this midpoint first. That's 63.46. Then the ADR again. Then our own Globex high. Might as well throw on yesterday's RTH open. And then yesterday's RTH high. So we got all of those levels to get through to break out of yesterday's high. Now to the downside, 63.15, and then our own Globex low. Then it's game on from there to the lower ADR. 111, 1236, big options level 6,300. You got a cog line 63. If you measure our own Globex range this morning, you'll see we got a halfback that we've already tested, 63.35. That needs to hold, or it's very likely we're going to go down and check the low. Now, the thing is, the clock is ticking, right? Because we do have some data coming in today that we have to be mindful of, but we've got time. So this is what needs to be resolved. We're still above the weekly floor pivot for now. Today's floor pivot is higher than yesterday's. That's bullish. Cancel each other out. We don't have an MDP from yesterday because we did end up going down there and hitting it. And we don't have one today because, well, we've already hit it. So no MDP. Today's channel is narrower than yesterday, but it's still a wide channel, all things considered. And with a wide channel, if we break out, we expect that breakout to fail. Just keep in mind, these channels don't make price breakout. And even if we do break out, it won't stop us from running and force us to come back in again. It's just a preview of what to expect if we actually did break out. And breaking out is a discussion of yesterday's price. We can break yesterday's range and expand. Just this wide channel implies that if we did break yesterday's range, we would just come back in again. Since yesterday had a decent move, we should have some wide S&R levels today. 63.62 is R1 and 6,300 is S1. And you can see if we go from the floor pivot to R1 or the floor pivot to S1, this is wider. It's further away. This is not as far away because the floor pivot's math is smart enough to point us in the direction that it thinks price is going to go. Now, again, that doesn't make price go in that direction. It just gives us some hint or preview on what's more likely. And this is saying it's more likely that we're going to go down rather than going up. It's just math, though, right? The math doesn't see headlines. It doesn't anticipate economic events on the schedule for the day or dealer hedging or anything like that. All right, we've put in a lot of work this week to fill in this shallow area. I'd say we did a really good job. The lower structure of last week, this double distribution that we had built, really helped out when we came off of that level. The trick now is, will it hold us if we go back and test it again? And if we break this 63.11 cog line, I think we're going to get that chance. 62.50 has to hold, right? We've been talking about these 50 levels for a while. From 64.50 to 63.50, and then from 63.50 to 62.50. That has played out exactly like that, right? That's where this bounce was, 63.50, and that's where this bounce was, 62.50. So we ran back up. We checked that 63.50, but we weren't able to keep it. Now we're underneath it, and we've tested it again from below. The concern is that we're not going to be able to get back above that 63.50, and that this is putting in some sort of move like that. The only good thing we can say is that this dip here didn't actually go down and break that level. So at least we have that. But what we do next here really matters. So get above this high or get below that low, and we'll go to this high or that low. Pretty simple. $10-day, 30-minute volume profile and TPO. We got matching point of control on both of these. The TPO actually looks pretty decent, all things considered. The volume profile, though, is just a big mess. There's nothing showing here of any value at all. And that point of control is not moving anytime soon. So if it just stays there over our head and we stay sideways, then status quo, nothing changes and everything's fine. But if we try this breakout and we get above that 63.80 area and make a run for it, that level is going to be in our way. We got to get on the other side of that thing. 64.11 cog line. We hit the VPOC that we had marked out yesterday, so we're done with that. And we don't have a new one because we already ran through that level. So we just take that one off the board. Nothing really shining here, insight-wise. We can see the open got a little bit of juice, and our open at 6 o'clock last night. Those are the two major levels of the profile this morning, but that's it. Nothing really stands out across the high, which, you know, would have been a great tell if there was something, but there's not. It really looks like it just petered out rather than hitting some significant resistance level, right? Otherwise, we would have seen something that looks like this lower level across the top here, and we don't have that. But now that we did put in this lower level, if we drop back down into 63.22, whatever that level is, we could see if this structure comes back into play again. Might act supportive. That would be a front run on yesterday's low. We're 2% above the 10-week. It's a good place to be. It shows that we didn't move too far too fast, and it doesn't owe us any sort of pullback or mean reversion. We're still inside the week's expected move, but the main issue is we're still inside that control bar. That bar is the boss right now, and until we get out of that bar, we can just sit here and chop. So we're IX10 inside of this monster bar, and that doesn't do any good. If we were IX10 inside of a little itty bitty bar like this one over here, that would be a lot more impactful. It would definitely get my attention, right? Like when we were developing an IX10 right there, and we had that amazing move out of the range. That's why we pay attention to those nice tight little ranges. But this big sloppy trash over here, nobody cares about this IX10 other than we got to get out of the box if we're going to do anything else, right? So that is the range that we need to get out of, and breaking the mid on this range is a really nice tell that we're headed back to test this low. Holding the middle of the range suggests we can go back up and check that high and try to go higher. Now we're below the 10-day, but we're still within that zone. We've got like a 0.5% on the upside and a 0.5% on the downside. It's kind of our like a bit of a gravity zone or a magnet area. We can hang out around the 10 in this safety area and really see a market correct, right? Markets need correction, but a lot of times what we expect is a correction in price. We see, you know, a big pullback or something like that. But we can get a correction in time too, where we just kind of hang out and sit sideways and let the market heal and digest after big news and big moves. So staying within this 0.5% zone gives us an opportunity to heal. Yeah, it's kind of my concern too, right? High, low, retrace 50, and then turn bearish. That's kind of the worry, but we don't have it yet. All right, chips are down, not a surprise. The VIX is down. We haven't really even seen a real vol event, but Spot Gamma and the others were saying that we did get vol on Friday more than expected. But I mean, quote, more than expected doesn't really equal a vol event. And they should be ashamed of themselves, all of them, for talking like Friday was some sort of vol event. It seems like they're just catering to their client base at that point, right? Trying to show relevance for having to pay high prices for their product. So whatever, we got a little bit of juice on Friday from the VIX, but it was nothing compared to real vol events that we've seen in the past. And looking at what's up this morning, I mean, we got nothing this morning. And we need the kind of things that are going to give us that rally, right? When you look at the S&P and the Nasdaq, you just look at the broader markets and you ask, what's going to make us move, right? Price isn't going to just move on its own. We need some sort of fuel to get us there. Dollar, yields, bonds, commodities, something has to give us this push. A lot of times it's the sectors like the Mag 7 and then you bring in China and Bitcoin and we can, break the box and run to the upside. What do we got this morning that's going to give us that sort of juice? A little bit of Bitcoin and a little bit of China. And that's it. We need more than that, right? Now, when we get into the open, we could see some 0-day flows that could come in and really get it going. At some point, the dollar or 10-year could start to move around. We got the 10-year auction today at 1 o'clock. That could get us out of the box. But with what we have right now, we're not going to break out and run with this as the fuel. Of course, we're not really going to break down and fall either with these being up. At least we shouldn't, right? Unless some headline comes in. Just remember, price can do whatever the hell it wants, right? We don't want to say it can't do something, just that it shouldn't do something. So we do got crude moving ahead of the report. If you don't trade, crude futures, you could always just focus on USO. It's a nice little proxy. The report's going to come in at 10:30. So if you want to play an over and under on this, why not? And we've got uranium, energy as well, just generically speaking, energy. I mean, look at that range though. Talk about get out of the box and lower highs on all of that. Now we had a little bit of a discrepancy here, a higher low and then a lower low again, which gave us like a matching low. And I'm kind of picky about this, but double bottoms to me, a good tradable double bottom exceeds the previous low. It doesn't match that low, right? If we get matching lows, then it's more of like a range or even say a cup or an inverse cup, depending on which way we break out of this. For a really good double bottom, I would have wanted price to break that low so that it becomes a bear trap. And then we get that really amazing rip back in the other direction, right? Because we trap them and their fuel adds the fuel to the fire and we get that explosive move back up. If it's a matching double bottom, then it's more likely going to end up doing that. Right. And you can see we got this candle right there. I'm sure it's hard to see in the stream, but there is a candle right there. We've already started that pop back up. So watch to see if that ends up putting in some sort of lower high, anything lower than that. And I would want it to be dramatically lower, half or this blue line, which is year-to-date anchored VWAP, getting hung up on that half and just falling back down, breaking the low and then continuing to go lower. Otherwise, energy is still in a range, and this is the control bar. Got to get out of that bar June 23rd. That's the boss. We haven't broke it and held it on either side yet, so that's what we want to get. It says that China's up, but I mean, look at the price action that we have up there. It's just a bunch of algo prints. We're really not getting anything up there. So we want to see this hold and sustain. Otherwise, look to check yesterday's close, like we, get a gap close. That's what we did yesterday. We gapped up here, came down and got the gap closed, and then ran. So if we are going to stay bullish, that's yesterday's close. Look for us to check that close and then run. And that's if we can even keep it green and to begin with. With the Mag 7 this week and not putting in any real print here in the pre-market, not seeing much out of that either, right? We're still above the 10 and the 20, barely. So, we still have this trend intact, but we're not getting any juice this morning. I know all of that probably sounds really negative, but I mean, we don't have a lot of negative chips because of AMD and SMCI and miners, but really that's it. And sure, chips can do it all by itself. They can do it, but they would need an NVIDIA. And so far, NVIDIA checked its low from yesterday, but it managed to stay inside the box. If we lose NVIDIA and it breaks out of yesterday's range to the downside, then it could probably get worse, right? Otherwise, this weakness in chips, as long as NVIDIA is staying relevant, shouldn't get too ugly. I don't like that it closed underneath that half. So all things considered, we got a pretty easy day, minus the potential surprise gotcha headlines with the Swiss. This is the range that matters. Get out of that box, and then we'll talk about yesterday's range. Get out of that box, and then we can worry about that bigger range. Right? The bigger range being this really big bar. So it's just from one box to the next, right? Because if we're stacked inside of that many candles, then we have to get through that many boxes. Today's Globex, yesterday's range, and then this bigger, broader range. And we just cut through the half back. The last time we did it, we managed to get back up. But if they don't come in to support this, then we're going to break this low, and we're likely going to come back down here and retest our own Globex low. So GTFO, right? Get out of the box. Keep your eye on the clock. We have some intraday reports. They're not all going to be early 8:30 events, right? That's what I got for you guys. Be careful. Be safe. I'll see y'all tomorrow.